I am so happy to report on this expiry day, Friday, the 15th of July 2022, a somewhat of an investing jousting match, if you will, between the champions in my account and the 500 best and bravest companies of the S&P 500, America's most proudest combination index to ever live on this land. So I'm going to go into the account, review the companies, their daily performance. I'm going to face them off against the S&P 500 in the final battle. But first, technical difficulties. There we go. Let's take a look at the account. Up almost $6,000. A steady climb. I kind of had a feeling that this was going to happen because a lot of my options were expiring today. And a lot of premium had to get deleted. So somehow I was going to get in the green somewhere. There is a twist in the story. There is an unlikely champion that really boosted today's performance. We'll get into that in a little bit. If you are paying attention to details, you actually notice it missing from the options list. Speaking of options list, I'm going to scroll down here. You can pause the video at any moment to try to figure out the exact position. As I'm going, you'll notice that all the information you might ever need about these positions is contained within this little square here. The numbers are on the right, represent the daily change in value in dollar terms and percentage terms. PayPal had a great day, and I just couldn't resist, by the way, a little commentary real quick, to sell the leap that I purchased yesterday, a $70 strike price leap that goes out 2 years, and collect an easy $235. So I have that now in cash. Therefore, the margin should have been reduced a little bit. So we'll get to see that in a second as we figure out the lay of the land here. Now, these are my champions. Apple, sitting at 830 shares, up over 1% today. Barely reaching, by the way, the $150 level. Had I not sold a call right here at 12:59 p.m. today, I would have been out 100 shares. But thankfully I get to keep them over the weekend. Well, maybe not. What if Apple's down hugely on Monday? But I want to show you this action right here because it's absolutely crazy. So, I have to go show more. So here's what happened. A few days ago, I sold the call at $150 level. Actually, it was like a week ago. There it is for $53. And just minutes before closing, this contract, you can see up here. Actually, let me show you. $53 here, 15, was fluctuating between like 1 cent and like 17 cents. So I ended up selling it for 17 cents or times $115. 15 cents, $15, literally like seconds before the close. As I closed the trade, the trading hours ended and options activity ceased. So I'm lucky to have got out of that trade and kept my 100 shares. Now, moving on down. What's going on here? There we go. Moving on down. The next champion on the list, Realty Income. Up 3%. It's a huge gain, even up a little bit after hours. Not only is it up after hours, but I have a dividend coming in from Realty Income of $89.8. And it's going to be automatically repurchasing shares, which is going to be a little bit over a share. And it's going to be added into my total holdings. No options activity on this champ. Main Street Capital is number 3. Unfortunately or fortunately, it ended up over $40 per share, which means that I'm going to have to say goodbye to 100 of my shares. Thankfully, I still going to have 851 sticking with me for the long haul. I will get back into Main Street Capital. I may sell a put at $40 in the future. We'll see what happens. The next champion is Goldman Sachs, and definitely performed like a champ. There's a lot to the story here. So what happened was that there was so much negativity. Let me zoom myself in here. There's so much negativity priced into the finance sector. People were expecting their earnings that are really, really bad. And in fact, JP Morgan missed earnings among other banks. Wells Fargo kind of missed, kind of not. So people were really worried. But what happened was that an unlikely champion came in to rescue the financial sector. And that unlikely champion can only be found in the history of this account. What you'll notice here is this 44 put expiration call option. What happened was last week or the beginning of the week, can't remember, I actually sold 10 contracts, which is quite a bit. This would tie up a total of $44,000, okay, in order to gain only 340. As the position went against me, let me go to C so we can get a better look at this action. As the position was going against me throughout the week, this contract started increasing in value, which is counter to what I'm looking for. And it actually dropped below the $44 mark, which means that I would be out like $1,000 or so. However, the earnings reports came in positive. Citigroup, the unlikely champ who saved the financial sector, was actually beating expectations on earnings by 30%. Therefore, the stock actually climbed over 13% on the day, ending up at $50, completely eradicating any losses I would have incurred if the contract were to execute. So $1,000 gain just from that today. That was the unlikely champion acting in my favor that really helped me push over the top and beat the evil S&P 500. We'll take a look at the actual breakdown of the match in a little bit. Next champion, Paramount, 200 shares. It was up 3.15%. A very good gain of almost $1,000. Of course, I have call contracts sold against this position. So where is it? How come it's not listed here? Anyway, I've call options sold against this position, so I couldn't fulfill, the exact gain. Well, actually, it expired. That's why I can't sell them. Expired today, so I have to re-roll them next week. So actually, it did go to zero. So Paramount up 1,000. Great. Next, Smith & Wesson up 1.15%. I really need this position to actually clear $15. But actually, it doesn't even matter that much right now because I'm getting a dividend and the call's expired. So if you could go as high as you can on Monday, that would really help my account. And those are my champions. And how did they do relatively? We won't know until we first take a look at the lay of the land, which means checking my leverage. My leverage is sitting at $99,969, equating to about just a little bit over 70%, 70.4 to be exact. What you want to do is double the margin number percentage-wise, because at 50%, that means that half of your account is leveraged. Therefore, you would be 50% leveraged. So it's a little weird how it reads over here. Either way, I've reduced the leverage by about 1,000. Hopefully, I continue to do so, as there might be another leg down. We may or may not talk about that at some point. If you're interested, in order of strength, these are my champs. Total return, Apple, Realty Income, Main Street Capital. Equity means size. Apple, Goldman Sachs, Main Street Capital, the big three. Although the other positions are fairly large as well. I only have really 6 champs right now. Okay, it's time for the final showdown, the relative performance. I'm ready. 1 day performance, 3.35. Let's see how the S&P 500 did today. S&P 500, 1.9. Slaughtered. Winning by over 1%. Very good news. How about 1 week performance? 2.27, my account, versus the S&P 500. Are they going to beat 2.27 on the week? Nope. S&P 500 negative 0.17. So killing it. killing the S&P 500 in the week. More than 2%. Huge gains. Huge relative gains. Unthinkable. Beheaded. 1 month performance, this is the big one. 1 month, 17.46. Over 27 grand gain on the 1 month chart. S&P 500, will it beat 17.46%? I can't wait to find out. It does not. It's up though, 4.44%. Losing by about 13% on the month alone. Huge relative gain month. I mean, this is just all everywhere. This is exactly the place where the outperformance comes in. All right, next, 3 months. 6% for my account versus the S&P 500. The 3-month chart should be interesting. Negative 11.82. Negative 11.2. So that is 18% outperformance. 18%. It wasn't all rainbows and unicorns though, as the 1-year chart is not as dominating as one might think. 4% for my account versus the S&P 500 sitting at 11.4. So about a 15% outperformance. What really killed me at the end of last year, or last year in general, when I actually lost to the S&P 500. Yes, I lost the S&P 500 last year. Beat it the previous two though. The reason was the Chinese IDRs. Chinese stocks completely murdered me. They were not holding up their end of the deal, but they fought bravely and superiorly this first half of the year and bailed my account from an embarrassing loss once again. So I did what every sane man would do, is sell most of it. Sold most of it. All right. If you're interested, this doesn't really matter, but the 5-year performance, 60%. In my account, I've been investing since 2018. Whenever I show the all-time chart, I'll also always have to disclose that August 28th was the first day that I started this. So somewhere around here, that's why the line is flat and there's no money in the account prior to that. So August 28th, 2018, and I have a performance of about 154%. So that is the final showdown, beating the S&P 500 on all metrics today on this expiry day, Friday. Now, with the strength of the financial sector and the expert opinions that the worst may be behind us on the inflation front, we could enjoy another green week ahead. But I'm not going to be surprised if oil spikes and then we see more red in the markets. This inflation has been really stubborn, and supply issues are probably not cleared just yet. So there's still a lot of fight on the inflation front to be had. There's a lot of fighting going on literatively and figuratively out in the world versus all kinds of foes. And so that's going to continue to weigh on the markets and investor sentiment as a whole. But you know what? That's not that bad, because if there are challenges and there's still bears out, that means that the market is not fully saturated with bulls. It means the market is doing what's called climbing a wall of worry, which bodes well for the health. You want to make sure that you're not topped out. If there's euphoria, that's your time to sell, right? So I'm not a market timer per se. I'm just sharing wisdoms that have been imparted to us by our predecessors, greater investors that we may never reach the greatness of. So make sure you take that as a grain of salt. I'm just selling options. That's all I'm doing. I'm not trying to teach you on market timing. I'm terrible at it. In fact, I'm so terrible, I'm not even good at as a counter indicator. I'm exactly 50%. Completely useless. My bias is completely useless. Can't even do it as a countermeasure. So if you bet against me, you lose. If you bet with me, you lose. The best thing to do is track the S&P 500 in the long run if you want to win this game and don't have the confidence to try to develop some skills to try to beat the S&P 500. Me, being this foolish, I'm trying to beat the S&P 500. That's my battle. I'm in competition, and I'm really trying to win. So that's the deal here. All right, I've reached 15-minute mark. It's enough rambling for me. I enjoyed fighting the S&P 500. It's been a very honorable and strong opponent over this last 6 months. Happy to say that I'm winning. Hopefully I'm winning on the next 6 months as well. I do company videos on the weekends. I like to do shallow dives in companies. So if you want me to review a company or give you my take in about 10-15 minutes, give me the symbol below. I want to hear that tracker. I want to see that tracker symbol ticker, and I will do a company review. Even if I don't know much about the company, it doesn't matter. I'm going to look at its numbers, performance, and whether I think it's a good idea or not, and whether I would go into the company or not. And also helps me with my research and gives me any ideas to add new champions to my army of 6. Used to be a lot bigger, but now it's pretty small. All right, I'm gonna end right there. Hopefully you guys have a good weekend. Check out the company videos during the weekend if I end up releasing some of them. Peace out.